Thank you for joining today live. Happy Friday. So this one is to continue the series on using your car for business. I think that anywhere that I go and present, even if this topic is not included in my presentation, it always comes up there. There's always a question. So whether it's for business owners that are making a lot of money or people that are just starting out, it seems like using a car for business is just always a question, and it seems like business owners have always been uncomfortable with this concept, or they may just think that they don't know what they're doing when it comes to using their car for business. So I'm here to give you more information so that you'll be able to become comfortable using your car for business. And thanks for watching. So for today, we're going to look at, for anyone that's looking to purchase a new car this year, or a car that's new to you. So it can be a used car, but it's new to you because it's, you're buying it in your business name this year. So I'm going to go through some of the requirements and some of the things that you should have in place to stay compliant for one, and also to get the maximum deduction. If you're catching my live for the first time, I am Ronica, and I help my clients to save anywhere from $5,000 for new business owners up to over $100,000 on their taxes using my tax planning strategies. I'll leave a link below if you guys are interested, that you can check out the information in the link below. But anyways, just to make it clear, this is not for people who you own business where your business requires a car. The two that comes to the top of my head right now are people in construction and people in transportation. So that's the two examples that I'm going to use for right now. But there are other industries where you basically need a car to operate the business, right? So if you're in an industry where it requires a car to operate a business, this does not apply to you, because most likely that car will be pretty much used 100% or pretty much 90% for business, and that will just be a net operating cost for the business. So this is more for people who are professional service providers, accounting, CPAs, attorneys, medical people, people in that industry, consultants, coaches, that really your business technically don't need a car for you to operate. I'm not saying that your business don't, but your business operation is not reliant on you basically having a car in your business name. So the first thing that you want to think about, that you can, once you decide to finance this car or to buy cash and finance it on your business name, a lot of people think that this step is what qualifies a car for a business car. But in actuality, this is not. Having the car in your business name is not what qualifies as a business car. I've seen a lot of people with cars in their business name that's not supposed to have the car in their business name, because they don't even meet the minimum requirement. And the minimum requirement is you should at least use the car 50% or more in your business. And nowadays, that's not hard to get to 50% or more. Even if you don't drive a lot for business, or you don't drive a lot for personal combined, you can pretty much get to that 50% minimum limit pretty fairly easily. So the minimum requirement to finance a car or to get a car in your business name is a 50% use, not the actual car in your business name. So I hope that's pretty much clear, that you have to use a car for business, not just having the car under your business name. So once you clear that point and you're using your car 50% or more in your business, the only other thing that qualifies a car as a business car is how much you use it. How much you use it up to that 50%, or how much you use it more than 50%. I shared last time that cars are in a category called listed property, and by the type of, because it's in that category, it's automatically assumed that there's also personal use. So with that, there's additional documentation to show that the car is actually used for business. And I am so sorry to say that one of the only things that can prove business use is actually keeping track of mileage, and also having calendar appointments to show that you're actually traveling, that you're actually, going to meet your clients, going to networking, going to buy supplies, things like that would qualify as business drive. So you can use your calendar to show your appointments, and you can also check and you can also use, you know, Mile IQ or one of those apps for your app. Let me see what Anne says. Does driving to your office count in the 50%? Driving to your office only counts if you have established your office, your home, as your principal place of business. So what that means that regardless if you have a physical location or not, you can do administrative tax at your home. And once you're doing that, it qualifies your home as what they call is the principal place of your business, and driving from your home to your office now counts as a business mile. If you don't meet that home office requirement, then it's just a commuting, because it's just you going from your home to your place of business. And according to the IRS rules, they said it, not me, that's just commuting. That's just not for business. And this is why car use is a high ticket audit item, because a lot of times when business cars are audited, a lot of times business owners are failing these audits and they're getting adjusted just because of these little rules that people don't know. What's the other thing that I wanted to say? So keeping track of your mileage, using one of those apps, or having your calendar or your appointment calendar, your Google Calendar, whatever you use to show that you're actually going, you're actually having, you know, business appointments on your calendar. The other thing is, once your car is in your business name, you get a deduction for either two things. You can either do the standard mileage, which is I think it's about 58 cents per mile. Now in 2019, I'm not 100% sure about that, but I think it's about 58% it increased. Or you can do the actual expenses of operating a car. And for the actual expenses, you know, your gas, your, you know, repairs, and, you know, all these things that you spend money on your car, those are the actual expenses. So you get a total of your actual expenses and say, okay, of all these actual expenses, I use my car 80% for business, so I get to deduct 80%. Or you can calculate your business mile and say, you know, I get 58 cents per mile and this is what I'm getting a deduction for. What happens is sometimes one can be higher than the other, so they allow you to flip from year to year to say you're going to take the higher in whichever year. For people who lease this car, a lot of times when you lease car, the car lease takes care of, you know, all the repairs and everything. And it's good not to have a car to repair. Oh my gosh, I hate car issues. I always like to have like if it's not a brand new car or almost new car, because I hate car issues. So your lease normally takes care of any car problems you have. So normally you normally just have your gas, your insurance, and then your lease payments. So for people that lease, a lot of times your mileage is going to be more than the total of the payments to operate the lease and so forth. So normally you should check to see if, you know, taking the mileage or deducting the cost of the lease is which one is more, because you don't get both of them. So that's the thing. You don't get, you know, your lease, the cost of your lease plus your mileage. You don't get both of them. You get one or the other. So the other thing to do if you haven't bought the car yet, the thing to maximize the deduction is it's called the gross vehicle weight. There's actually something like this, that if your car is over 6,000 gross vehicle weight, then there's no limit on, say for instance, you bought a car that's say 50,000. If it meets this gross vehicle weight in the first year, there's no limit on how much you can pretty much write off based on your business use, right? But if the car is under the 6,000 weight requirement, then there are limits on how much you can deduct each year in you know, depreciating and writing off the cost of this car. So if you're looking for a car, the maximum you can get is getting a car that's over the gross, I can't even say it myself, gross vehicle weight of 6,000. I am not a car expert, so I don't even know what car comes to mind that's over 6,000. I'm thinking mostly SUVs and bigger vehicles that will have that weight requirement. And the reason for this is they don't want people getting a whole bunch of luxury cars and writing them off. And still, I don't even know if luxury cars meet that weight requirement. So that's one of the bigger things that will give you more deduction, is buying a car or getting a car that is over this vehicle weight of over 6,000. Probably someone that knows more about car can comment to say what type of car meets this gross vehicle weight. So that's it for today. If you're looking to finance your car in your business name, make sure that you're using it for more than 50% in business. Make sure that you're keeping track of your business use. If you want to write off way more, then make sure that your gross vehicle, I don't even like saying that, your gross vehicle weight for your car is over 6,000 pounds. And that's one of the ways that you can get more deduction for the business portion of your car. If the car is in your business name and you still use it for personal, not a problem. The only thing is you won't get the personal portion as a deduction. Well, that's it today. Again, I am Veronica, and thanks for joining.